Hey everyone, welcome back to the Modern Savvy CPA. We're continuing our series on bad money habits that businesses have that they need to avoid or to understand that they need to let go of. The next thing that you need to do, you need to mentally separate your two things. Fostering a mental separation between your business and your personal world is very important. So you want to make sure that you are not mixing your business banking with your personal banking. At first, when you're starting out, make sure you deposit what you're investing in your business into your business bank account. So it's there, and then you start spending it from there. Don't start spending it from your personal. Take the money, put it into your business account, and then start spending it from there. That's how you want to do it. So, there's ease of reconciliation. There's, you want to make sure that, it's easier to understand. You're not forgetting anything. There's a lot of time you're busy working on your business and you do not remember stuff. Why would you want to spend extra time, extra brain cells, worrying about your finances, worrying about one more thing to remember? If you separate everything, then you don't have to remember. You use the right thing for the right thing, and the right card for the right thing, and the right account for the right business, and you are set. You don't have to remember anything. When you go back and you look, everything is there. It's just an ease. One of the other reasons that you need a business credit card is like I said, your business is its own entity. You want to set up good credit for your business. You want to make sure you're doing that. If you're using personal credit cards for your business expense, you're personally liable for those things. You want to make sure that you're using your business and your business EIN number so it goes on your business credit report. If you're trying to buy a house and you're using personal credit cards for business, then and you have a running balance, that could affect your FICO and your debt to income ratio and all these different things when it comes to your business. So you want to make sure that you're separating your business as its own entity. Keep separate things. The separate bank account, the separate credit cards starts off your business credit. At first, it might require more work to get everything set up. But trust me, once it's set up, the ease of this is going to be what is going to work for you. You're not going to have to think about it. Now I have several businesses. I have a credit card. I have a rental property. I have several rental properties. I have my own accounts. Everything is separated. Every single thing is separate. So if my business card is for whichever business I'm using that for, and the books are kept. The credit card for my other business, the books are kept. The personal one, books are kept. Rental, separate. So everything is separate. When I go in and I pull everything in, everything pulls in, and it's nice and separate. When I'm ready to do the taxes or look back on things, it's all nice and separate. It's all there. I don't have to remember what I spent this money for. What did I spend this money at Home Depot for? Do I got to go back and look through my receipts to see what that was? I keep my receipts, of course, but I don't want to have to dig through them. I want to make sure that I have everything pegged. So when it's time to put it together and it's time to look at it, it's time to do that audit trail, everything is together there, So you want to make sure that you're doing that. One other thing that I want to tell you guys is that when you have a company, there are certain things that you cannot help but have a mix with business. And there are a few things that happens. Some things that you use for personal and some things that you use for business. These things, you pay for it. I personally pay for it depending on what it is. If it's something that I'm mostly using for business, I pay for it with my business accounts and credit card, and then I will take out part of it that is personal. So if it's 80% business, 20% personal, at the end of the year, as an accountant, you take out your 20% personal. This part is where I've seen the most people lose the most tax deductions out of. When I get a new client and I start working on their taxes and I don't see certain expenses in their books, I ask them, and a lot of time it's their cell phone and their car. I know we use our car a lot for our business. How often do we use it? Are we tracking that mile? Are we doing that thing? So that's the two major expenses that I've noticed that are not on a business books, and it's often forgot if your accountant, CPA, or tax advisor is not analyzing what you're giving them. If they're just taking the numbers and putting it on their tax return, they're not going to be looking at that. That is the one thing I always ask. The third thing I usually ask about is the home office deduction. A lot of the times you have your office in your home, you have a specified place for your home office. That is usually something that's forgotten. So those are three major tax deductions that are left out of if it's not kept track of properly. So you want to make sure that you're tracking your miles. You want to make sure that you're analyzing how often you use your cell phone for your business, and you want to make sure that you know what the square footage of your house is that you use for business, and you're tracking your personal expense for your home, so then you can use that percentage of your personal expense in as a business deduction. This is one of the reasons you should be doing tracking of your expenses on the personal side, because once you're tracking the expenses on the personal side, part of that is deducted on the business side. So if you have a good accountant, a good CPA, a good tax advisor, these are the things that they're gonna tell you about that you're missing on your business books. So you want to make sure that you're doing that. You want to make sure that once they look at your books, you ask them about that if they're not doing that. Because every single new client that I get that's a new business, one or all of these items are missing from their books, and it was not on their tax return or deducted on their tax return prior. So those are just a few of things that a good accountant, someone that's analyzing and advising and reviewing your books will pick up. So when it comes to tax time, everything is there and the books are ready to go, but it needs to be analyzed. The last thing I will tell you about is, your payroll. So when you have employees, sometimes you have vehicles that your employee can use personal and business. You want to make sure that the employee is managing that. If you're reimbursing them for their autos, you want to make sure that you understand what you're reimbursing them for. There are several different auto calculations that you can use. There's several different calculations, Accountability and Non-Accountability Act that the IRS uses for calculation of personal and business use, especially when it comes to still employees. So you want to make sure that you're looking at that and you understand, what are your employees. You want to track what the trends are. You want to understand, what the employees are doing with the stuff that you're using down the roads, and you want to keep track of what you're offering to your employees. So, you understand the businesses, that business and personal things are how it's mixing, and if it is not mixing, what happens. So down the line, you don't have unnecessary stress. So you want to make sure that you are doing all these things, so you can look at all these things when it comes to keeping your books nice and clean for several different things. Down the road, we are going to go over why, other than proper bookkeeping and proper taxes and analyzing your books, there are many, many reasons why you should be keeping proper finance records when it comes to your business and your personal, more so your business. So, you want to make sure that one of the reasons that we've discussed today is definitely you want to start your business credit correctly, and you want to make sure you're not mixing your business credit with your personal credit. You want to make sure business credit is under the business tax ID number. The business bank account is under the business tax ID number. The business is its own entity. When you're going out there and you're going to need credit, or you're going to need to, someone is going to need to analyze your business, you want to make sure that you're doing this so then your business does have some type of credit. You also want to make sure if you're mixing business and personal finances, then your business credit is not under your personal name, because that is going to affect whether you get a loan or not, whether you get that mortgage or not, whether it might affect your interest rate that you're getting. So you want to make sure that you understand all of that. So this is when it comes to making sure that you don't mix business with pleasure. Please do not mix business finance with personal finance. This is Sherron, the Modern Savvy CPA, and we will talk next time on a next bad money habits that businesses have and how to avoid them.